Good afternoon. This is Anka Metcalf with TradeOutLoud.com. Welcome to the Futures Market Outlook for the week of July 30th. And we're going to begin with the E-mini Dow Industrial Average. After a red day in the markets on Friday, where most of these future indices have had a big move down. S&P has dropped more than 25 points, NASDAQ 131 points to the downside, and Russell lost 39 points. E-mini Dow was the only index down 99 points on Friday. However, it is the one index that is holding the best. So right now, relative strength is coming from the E-mini Dow. We're going to take a quick look at the daily chart. So daily chart, although it triggered a reversal on the daily chart, is still trading into an area of support all the way to the 25,350. A reversal at this point. We've pretty much had a quick bounce into the close, and actually the bounce came after the big drop in most of these indices into 1 p.m. Eastern. 1 p.m. Eastern has reversed the price and so far holding actually really weak. If we look at the hourly charts, obviously we do have some relative strength that is coming, like I mentioned before, into the E-mini Dow at 25,450, landing into this prior high here that may oppress the price at this point, and price may get rejected at the 450 level. So this is something that I'm going to watch in the overnight price action, and also coming into tomorrow's and getting ready for day trading, obviously, and swing trading next week, and obviously this week. All right, so if we get the price rejection at the 25,450 zone, we are going to have definitely a battleground and turbulent zone all the way to the 25,370 zone. If the price is going to manage to break below this range, it's going to have a more accelerated drop into the 25,300. Now let's move on to the daily charts and let's see where the next support level is going to be. And the next support level is into this prior high that was set on July 19th. And we also have a confluence zone that is coming from the 10 exponential moving average at the 25 to 20 zone. So the overall price action for next week, we will actually look at the price pattern and if the market should receive some positive signals and if we should move to the upside. YM, E-mini Dow Industrial Average, has more odds to continue and accelerate to the upside than the rest of the E-mini index futures. So right now, although we tapped into resistance at the 585 level, if we break the 585 level, this is going to be the catalyst for the price for an acceleration higher back into the 800 level. So this is contingent on the price accelerating into the 570 zone. Over 570, we will be bullish throughout the week, and price may accelerate higher, like I mentioned, all the way into the 25,700 and 25,800. Now let's move on to the E-mini S&P 500. The E-mini S&P 500 index futures, again, finished the week in a relatively neutral mode. So we didn't give back all of the profits for last week. So we're still stabilizing. We're still not breaching prior week's low, which is 27.89. If we happen to breach this area, the 27.90 zone, in this week, in this trading week that starts less than 6 hours from now, we may see an acceleration lower, and the next price target that I'm going to be looking for is going to be into the 27.70 area. Let's move back to the daily chart for more information on that. So like I've mentioned before, 2800 is going to be once again the big catalyst. And remember that we have been balancing out at the 2708 through 2710. But if we break below that area back into the 2800, that's going to be back into the support area again. And it's going to be very important for the price to hold this area. If the price is going to breach this area, it's going to slice through this area then we may have an acceleration lower back into the 80s once again. So what I'm going to do right now is I'm going to go ahead and calculate the next support level that we can actually look for more for a possible reversal or continuation too. So like I mentioned before, this 2800 is going to be a big catalyst, and it's deriving also from this prior pivot high that was set on the 10th, on July 10th. So if this level is going to be breached, we may see that acceleration lower all the way into the 2789, 2790. We also have the 20 simple moving average into that point, and we also have this prior pivot high that is going to create that support, and we may see a reversal off of that point. So at this point, although we are trading, we closed into the prior area of support that was set on July 18th through July 18th and 19th. If we don't see a reversal at this point, we may see a continuation lower. And this information we have from this hourly chart. We have a congestion, we have a cluster. It's actually a weak cluster, and if the 200 moving average is not going to create any kind of support for price action at this point, and also prior price action that is creating this minor support for price at this current level between 2810 and 2815, then we may not see a further acceleration higher. What I will be monitoring from the open tonight in the overnight trading session and also going into next week is a break above 28.21. If the price is going to break over 28.21, we may see an acceleration higher. Price velocity may take may raise the price all the way into the 28.24 to 28.30, and this is going to be a decision area once again. Again, we're going to be looking for either a continuation over 30 or price rejection, but this is going to be one of the key points. It is deriving from this prior pivot high, and this is from last week on Tuesday. So we're going to be watching this area very, very carefully. All right, let's move on to NASDAQ. NASDAQ was one of the weakest, actually, was the second weakest index, followed second weakest index. The weaker index was Russell at this point. And we're going to begin with, let's begin with the weekly chart here, because I'm looking for the day trading perspective on these indices, and also for the swing trade perspective. So like I said, NASDAQ was had a really climactic run into the New York trading session. That began actually off the open, exactly off the open. And the deceleration actually kicked in at about 1 o'clock. 1 o'clock was the break time. So when everybody hit the brakes, and literally they try to hold into the close of the session. But this congestion that we have here, this cluster that we have here, is still very, very, very weak. 73.22 is resistance at this point, and if the price is not going to break through this resistance at 73.20 to 73.25, then we may see the price rejection that may oppress the price and may push it back down into these lows that were created on Friday. And we can see from the daily chart, I'm going to show you in just a couple of seconds, that we may have room to continue more to the downside. So this is going to be on watch. This cluster is going to be on high watch, especially in the overnight trading session and going into the New York session tomorrow. So the key levels right here, we need to break 73.23. Remember, this is a minor area of resistance that is deriving from this prior pivot low that was set on Monday at the open. So this is going to be key right here. And also, if we break obviously below these lows right here at the 72.80, we may have room to continuation lower. How low can NASDAQ go? NASDAQ E-mini futures. Now let's take a look at the overall chart. The next area of support is coming all the way at the 72.30 zone, where we have a prior pivot high that was set back in June on June 7th. And that is the next area of support that we see here. We also had a pullback into the same location, pullback and release all the way to the upside that carried the price. And we actually had a new high that was created at 75.30 just last week. All right, so these are what we're expecting right now. From a longer perspective, I've mentioned the 70 area, the 72.70 area to 72.50 area. 72.50 area is going to be the problematic area for an acceleration back into the next area of support, which is 72.20, deriving from this prior pivot high, minor support level developing at this point. And we also have a confluence with the 10 exponential moving average, so we can see some kind of price reaction at that point. All right, let's move on and let's continue with Russell. Russell, one of the weakest indices, where it had the sharpest decline, 2.3%, and also close to 40 points to the downside. You don't see this every single day, especially when it comes to Russell. So there was a massive distribution that happened on Friday. The weekly chart suggests that if we open below, we may have room to even release some more selling pressure all the way into the 1650 zone. 1650 zone is an area of support. Moving to the daily chart, and again, it is one of the weakest. It is we closed at the low in Russell, so that's not a good sign for recoup. At least into the first moments from the open and so on. The next support level that we have in the Russell, and the fact that we have a huge tradable void, this is what created the price velocity to increase its dynamics in following through to the lower targets. The next target level is going to be into the 1650. That is going to be a major support level at this price, and we can expect some price reaction off of the 1650. So also Russell is going to be is going to continue to be on my watch list as being one of the weakest indices. Pullback sells in Russell may continue lower, as low as into the 1650 zone. All right, let's move on to some commodities that we have on our panel. We're going to begin with crude oil. Futures, and since we're onto the daily chart, they seem to be topping out at the $70 zone. What I really like is the weekly charts on oil and over $70. We have talked about this in our trading room. Over $70, we may see a reversal back to the upside, visiting prices of 72, 73, and back into these highs, even above the 73 zone, for a continuation higher. So the weekly chart is actually looking very strong at this point. The more we accelerate into the $70, the more we can actually potentially move a little bit higher. From the trending perspective, we had an immediate reaction that came in at exactly 1 o'clock, when most of these most of the indices in the futures market have reversed. We have seen the same reversal that happened at 1 o'clock exactly, and we're running right here into a minor area of support at the $69. This is a critical area because if the price is going to get rejected at this price zone, we may see an acceleration lower, and if the price is going to trade below 68.80, we may see the price come back down into the 68.40 zone. So it is very important for price to try to move up a little bit and try to break above the 69 zone, push higher into the 69.20. So therefore, if the price is going to break through the 69.20, any pullback into the $69 may be buyable for a target level into the 69.80 and back into the $70. I would love to see the price continue higher and push higher into and create these higher highs and higher lows going into the $70, so we can have a better risk for a possible swing and also for a possible day trade moving forward. Let's move on to gold. Gold futures. We've rolled into a new contract last week. And let's begin with the daily chart. Daily chart has been literally accumulating has been coiling and it has set a top into the 1236 area, and it has not gone anywhere yet. We have pinned, you see the bottom here at the 1210 zone. And let's bring back the weekly chart. Weekly chart seems a little bit more appealing to me. This is why gold is having such a hard time at the 1236 and 1237 area. We have a prior pivot low that is at 1237 that is creating a lot of resistance for current price action. We are also stabilizing. As you can see, we have pushed through this 200 moving average, have tapped into the double support level here at very close to the 1200 level, reversed, and this week a pretty neutral candle right here. And I do have an alert for the 1237.20 zone. I see this as a possible swing buy moving into next week. Moving into this week. Today is Sunday. Okay. So if we get a push to the upside, we may release some buying pressure that may take the price into the 1260 as a target level, as a price target level. So from the weekly chart, we look positive on gold continuing through the week, but it is contingent on the price breaking the 1237 area. All right, let's begin with some more commodities. And what I have on my list is actually heating oil. And heating oil has been on fire. It has been really, really rising. Really nice price action. And last week we've triggered a weekly buy at the 2.14 level, acceleration a little higher. And again, it has been battling this area, the 214 to 215 level from this prior pivot high that was established back in January 29th. We may have room for a continuation higher into the 220s once again. So I see a pattern of price continuation. As long as this price action is intact, we may see some more buying pressure coming into heating oil. Right now, we had a red day on Friday. We have not triggered a weekly sell. We're still stabilizing. You see this prior pivot high here from July 13th is creating support for current price action. Actually, we do have a strong area that is coming from actually an overlap of the 10 exponential and the 20 simple moving average. And we actually traded on Friday a little bit higher than the 50. We landed into this cluster here. So this is what the problem is right now, this prior resistance. But the more we stabilize and even a pullback into the 214 to 213 and a half, we may see a reversal that may push the price higher back into these highs and into the 220s. And I see another target level into the 222 and even into the 225, may release some buying pressure into that zone. RB, and this is gasoline, RBOB, landed into resistance right here, made a peekaboo high above the resistance area, very perky and very, very strong. And if we break above this area and we stabilize above this area again, we may see higher prices and a price continuation into the 220 and back to the 225 and 228. So this is going to be on close watch. Obviously, it had an acceleration higher for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So I think it's a high time for a little bit of a pullback here. Double top. Let's watch a pullback and let's see if we get it back into the 212 zone or the 210 area. 210 area and the 215 area may potentially create another buying opportunity for RBOB for a continuation higher. Let's take a look at natural gas. Since we're discussing energies here, let's take a look at natural gas. And natural gas, this is the daily chart right here. Last week was a pretty good week for natural gas. We had Tuesday, Wednesday, Thursday, and Friday acceleration to the upside. Let's take a look at the weekly chart and see if we're setting something up here. The 2.80 is going to be a launch pad for price for natural gas. It's not going to be an easy ride because it has a lot of key strong levels that are going to try to push the price a little lower. We have an abundance of moving averages here. So not only that, we have the 200 moving average, that is oppressing a lot of resistance at that point. But we have the 20 simple moving average, we have the 10 exponential, and we have the 50 simple moving average that is creating some price oppression at that point. But if we release above those areas, the more we accelerate a little higher. I'm going to watch it on the 1 hour chart, and also going to be watching it onto the 4 hour chart for a continuation pattern, and obviously for a smaller risk at this point. So I just want to bring the monthly chart real quick. Even though we have been trading in a very sideways pattern for a few months now, for a few considerable months, still the buy zone remains into the 250s to 260 areas, and any bounce into this area may create price acceleration to the upside. All right, so let's move on now to copper, and let's check out the charts. And we had a pullback into the 50 simple moving average, also a strong confluence area deriving from these prior pivot highs that create minor support at this price point at the 266 and the upper 266 level. We have a little bit of lift in price at the 276. I would actually like copper if it trades over $3. So this is the pattern that I'm seeing. And by the way, this is the monthly chart. We had a sideways range acceleration higher, pull back into the 10 exponential, acceleration higher, hit resistance. We have pulled back. We didn't hold. The 10 EMA did not hold, and obviously this prior pivot high did not hold. So this minor resistance was a little bit more fragile. Wanted to retest a little bit steeper. So we didn't continue higher, but again, we're still respecting, from the monthly perspective, we're still respecting the higher highs and higher lows. So if we trade above $3, this is going to be my trigger for a continuation higher for a longer term trade in copper. Also, from the weekly chart, last week we've triggered, so this is a really nice trigger that we had into the 280 area. 280 was the trigger point, was the pullback buy. With a weekly trigger at 280. We've continued higher, and we still have a lot of room to continue higher into the 290s. So I'm going to watch copper, and let's zoom in to the daily chart right here. Okay, so we have established a bottom. So remember, the higher time frames are telling us that we may still have a continuation to the upside, but we just need the price to stabilize, root, pivot into, create that sustainable support level from which it can actually lift and reverse back to the upside. Right now, we pretty much have here a 180 reversal. So we had an acceleration higher, and this is the daily chart. And we've had Thursday the turnaround here, and we had Friday a pretty stable day. So we're gonna watch this area. Remember that on Friday we finished into the 278.5, which is a minor support level at current level. So we're going to possibly watch for a continuation higher, and if the price should trigger 283, I'm actually going to set an alert right here because I'm going to have it on close watch, obviously above. Okay, so if we break above this level, we may have a continuation higher back into the 286, which is last week's high, and then a continuation into 288 zone. So again, this is going to be a highly turbulent level, but if we break through the 288 level, then we have a really nice tradable void all the way into $2.96. Excuse me. And sorry about that. I'm still recouping after a really, really bad cold. All right, let's take a quick look right now at wheat, wheat futures, and let's bring the monthly chart up. The monthly chart has been consolidating, double bottoming right here into this prior pivot low, prior pivot low. What I do like about this pattern about wheat is that it moved a little lower, has created support at the 281 zone, lifted, and then created another secondary support level at the 409. So we do have our second higher low at this level, and we're really trying. And once again, we do have across the 50 and the 10 EMA, we have bottoming tails that are suggesting that the price may continue higher at this point. So the monthly chart looks like if we break the 550 again, we may have room for a continuation higher. Let's move on to the weekly chart. Weekly chart seems rather choppy with pretty wide stops. I typically don't trade something that doesn't have any tight stops. I like the bounce that occurred on the weekly chart. Very, very strong. We have the fanning out of the moving averages here. We have the 50 moving average, and we have the support from the 200 moving average. We have a lot of bottoming tails at this point, and the breakout came over the 515 zone. From the daily chart, we had a really big day last week, and this was on Thursday. A release higher, tap into this double top right here. So I think the more we pull back into the 520, we can see a reversal at the 520 and for a continuation higher. Let's take a look at something that I have been in a trade that I have called and I have been in for quite some time. I do apologize for the coughing. I try to turn off the mic whenever I cough. Still recouping after a really, really bad cold. So I still see feeder cattle for a continuation higher, especially when it comes to the weekly chart. If we break over the 155 level, we may continue back into the 160 zone. Okay, and last one. We're going to talk a little bit about live cattle. It has been basing for quite some time. We do have a pattern of higher highs right here and a retest of the same support level, developing a cluster at the median level of 105. We finally broke above the range, and this is last week and this week we have managed to trade above. And if we stabilize between 106.5 and a 110 zone, we may have that reversal that may bring the price back up at least into the 112 to 113 level. This is all for now. Thanks so much for tuning in. And if you would like to trade with us, you can visit our website. It is tradeoutloud.com. We're running futures, and we're running a futures day trading and swing trading room. Also, we call swing trades from stocks, stock swing trades and ETFs. And if you would like to learn more about it, you could shoot us an email at info@tradeoutloud.com or just visit tradeoutloud.com under the trading room tab and you find more information about that. This is all for now. Good luck, everyone, coming into the next week, and let's trade into the green. Have a wonderful trading week.